Okay, let's see. All right. Looks like we are live. Okay, let's see how many people are joining us before we can get started. Give me a second. Excellent. How are you guys doing today? How's the
All
coffee?
well. Coffee is
Good?
wonderful,
Yes,
honestly.
okay, all
It's
right.
really, like
Yeah.
refreshing, you can say.
Okay, good. I'm surprised that you can drink coffee at like 3:30 right now.
Oh, no.
Excellent.
I can drink coffee literally all the time.
Okay.
It's like even like 5 minutes before me
Right.
going to the bed, I need coffee.
Okay, okay.
And now he put me in a position where I'm used to that.
Oh,
Yeah,
yes.
we're becoming used to it, of course. Yeah, that's true.
Excellent, excellent. Glad to hear that. Okay, looks like we are live. Good afternoon, everyone, and happy Friday, right? What a wonderful day and time to be talking about corporate tax on a
Absolutely,
Friday.
absolutely.
In the beautiful winter afternoon in Dubai, right?
Yeah, that's true. That's true.
I'm excited to be hosting this event today, and thank you all for joining us. We had about 250 people who actually signed up
Wonderful.
for the event.
That's great.
So I'm glad to see that there's so much interest going on in corporate taxes and with the recent changes. And Saqib Omer, thank you so much for joining us
No,
today.
thank you so much for having us, of course.
Absolutely.
Wonderful setup. Really liked it.
Yeah, thank you. Thank you. And you guys came all the way to the Pluto office. So excited to be here. So I think people are just trickling in right now. So we'll get started in a few minutes, right?
All right.
But until then, for everyone who is currently here, right, currently live and attending, please go ahead and use the comments section, which you can find right underneath the video, right, to be able to tell us like, what is your role in your company? What got you interested in corporate tax? And if you have any questions, might be a good idea to start writing them down right now as well, right?
Absolutely. And by the time I can have a few more sips of my coffee.
Yeah, absolutely, absolutely. So, Saqib Omer, like, where is your office here? Is it nearby?
Yeah, it's not very far. It's nearby in Conrad Tower.
Okay.
It's like 10 minutes drive
Okay.
from here. Yeah,
Beautiful.
it's very-
Yeah, across the road, you can say. Yeah,
Right.
From DFC.
The traffic in Dubai has been so bad lately. It's kind of insane.
True.
I'm sure even the
True.
10 minutes might have taken you so long.
Yeah, of
right?
course.
Yeah.
It feels like, okay, you're all the time like surrounded by the tourists.
Right.
Yeah.
The
Right,
people
right.
are like coming in, and the
Brilliant.
roads are really busy these days.
Brilliant, brilliant. Okay, awesome. Looks like we are almost there.
Mhm.
Just give me 1 second. Okay, perfect. I think we will get started. So, alrighty. So, okay. So, hello, everyone. My name is Mohammed Ridwan, right? This is the Pluto and SA Consultants corporate tax webinar. We've been doing this pretty frequently because of the recent changes that are happening, right? So, today's specific agenda, though, we're going to be really, really deep diving into corporate tax laws as it relates to free zone entities, right? So we will talk about that. We'll give an overview of corporate tax law as it relates to free zone. We will also figure out what are the requirements for free zone entities, right? Because historically free zone entities have been like void of these kind of like expectations, right?
True.
But there are certain requirements that are needed. We will also talk about free zone entities and how they do transaction in the mainland entities and how that relates to that.
True.
And
Yeah.
finally, we'll talk about permanent establishment as well. And then throughout, we'll take questions and we will do our final live Q&A at the end as well, right? So, okay, let's get started. So my name is Ridwan, right? I'm the co-founder and chief operating officer at Pluto Card, right? I'll just give a brief introduction to Pluto right now. Pluto is the #1 corporate card and account payables management ERP that is built specifically for finance teams in the UAE. With Pluto, companies are able to get unlimited corporate Visa cards, capture receipts easily using WhatsApp, manage all of their account payables and invoices in one place, and carry out employee reimbursements. Pluto also allows accountants, many of you who are joining us today, right, to be able to fully automate their accounting so that you can go from your transactions that are happening on cards and invoices directly into your accounting ERP. Pluto serves over 350 customers today, and we're excited to continue to be partnering with many folks and providing the value that we are. Joining me today are two of UAE's best tax experts, right? Saqib Iqbal and Mohammed Omer. A brief introduction for them. Saqib is the founding partner at SA Consultants, and Mohammed is a managing partner at SA Consultants as well. We're extremely excited to be hosting this webinar with them, especially since both Saqib and Omer have extensive experience and deep understanding of UAE's tax laws and regulations. Given their experience, they also founded SA Consultants, which is now one of the fastest growing auditing and advisory firms in Dubai. It is also part of IGAL, which is the Intercontinental Grouping of Accountants and Lawyers. Saqib and Mohammed, if you had anything else to add to your intro, I'd be more than happy
No,
to say.
I think you have already explained really good. First of all, thank you so much for having us, and really excited to be here. I know that people are actually discussing about corporate tax and the new law, how it is going to be implemented, how it is going to impact their businesses. We are also like continuously getting a lot of queries, I'm sorry, and questions about like different types of situations with people are facing or they are thinking that how it is going to be kind of impacted.
Right.
Uh, I think SA consultants or being part of SA consultants is it's I think it's the right time to be part of this kind of community
Right.
and to be in this market where we are facing this. We are taking it as a challenge
Right, right.
that yes, this is new and we need to make people aware about
Right.
it. And thank you so much for creating this whole platform and really excited and known that we have to keep doing it also
Absolutely,
in future.
absolutely, absolutely. So let's get started. I think we have a lot of people who have already joined right now,
Wonderful.
and let's get into the meat of it. So today we'll be discussing UAE corporate tax and its impact on free zone entities. So let me just set some background, right? So UAE free zones have been enjoying substantial benefits since the formation of free zone entities. I think all the way back in 1980, right?
True.
That's when it was first free zone.
Yeah.
So free zone persons, or what we call FZPs, right, have been enjoying substantial tax benefits and many other benefits over since then, right?
True.
With the new tax regime, though, unless these free zone persons are careful about their structure, their businesses, they may actually incur those taxes, right? So we'll just get started. Saqib and Mohammed, what should free zone persons or entities look at when preparing themselves for the upcoming corporate tax laws?
I believe the first thing they have to look into that their company structures. First of all, they have to look into their company structure, how their companies are structured between the free zones and the mainland. Whether while you having multiple companies having the same entity like a holding company, and you have a parent company and you have subsidiaries, or you have a parent company and you have branches across the UAE or across the world. So first of all, the most important thing, you need to understand what is your corporate structure is, and how corporate tax is going to be implemented on the structural level of your company. So this is the first thing I believe which we should consider for all of the group of companies who are having more than one offices. And in case of one company, they have to be consider about their sales streamlines, their purchase streamlines, and they're dealing with the businesses, like they are dealing inside the country or outside the country, or how their income streams are, uh, or how much their income streams are is from the country, from the UAE mainland companies, or whether they are from the outside of the countries. This is, we are explaining about the public consultation document. The most of the explanation is come into that one, because the law which actually came in place, it didn't have that much extension of the explanation on the free zones.
Okay.
But we are expecting it is gonna be somehow same
Okay.
as it was in the public consultation document. So most concerned thing is the qualifying income. But the problem right now we are facing, the qualifying income, the definition of the qualifying income, we didn't receive it in too much detail. So we are still waiting for that one. But uh, other than that, there is a lot of matter which we have to consider before jumping into that one. So
No,
that should be
absolutely. If I just like really well explained, and technically free zone companies, especially when they started developing different types of free zones. So we know that there are like non-designated and the designated free zones in
Right.
UAE. They have some tax benefits. They have the avoidance in few things or exceptions in few certain things, and those were the benefits they've been enjoying. Now, when it comes to a free zone entity, the existence of a free zone entity is typically related to being in UAE, sitting in UAE, and sometimes doing a lot of activities outside the UAE,
Right,
or
right.
being part of a very major group of companies where they know that they've been actually using this office or this free zone company
Right.
for certain purposes.
Right.
Now, if they are like special purpose vehicles, they are like special companies formed to serve some other companies around the world. So still, they need to start thinking about their overall legal structure, that how they can form and
Right.
how they are actually formed.
Right,
So
right.
that is, of course, the
I see.
starting point to
So
look
if I
into.
want to summarize, like I think what you're mentioning is that um, a lot of people form free zone entities, but it may be special purpose vehicles, or it may actually be doing businesses along with mainland entities or internationally as well. So, for example, Pluto is a free zone entity as well. We're in DIFC right now, right? But we do have businesses that are occurring in many places as well, right? So the whole legal structure that is extremely important to have a really tight grip on at the beginning, right? To be able to see where are your customers located, right?
Sure.
And where is your business located, and what kind of things are you doing in those free zone entities?
Absolutely.
Is that correct?
Absolutely. Now, people have different types of multiple types of income streams within the free zone, outside the free zone. They've been dealing with mainland companies, as Omer actually mentioned very correctly. Now, they are trying to generate a lot of income that income is being sourced within the UAE and outside the UAE. So, of course, this is the first step to start understanding. Maybe they just have to maybe draw down the whole structure and start thinking, okay, these are my income streams, because those ultimately have to be divided or differentiated in terms of calculating the corporate tax in the future. Because when we move back to the public consultation document, which we had last time, which we received last year, that was the starting point of corporate tax implementation. And out of that, the crux we found out of that document, we know that there are going to be exceptions, of course. There are going to be some exemptions, of course. And based on the decree law which we received, we know that the qualifying income streams are going to be really important, and we need to understand that how it is going to be impacted and what are going to be the qualified income streams for the qualified free zone persons. So we're still waiting, of course, but there are a few things which we need to, of course, start talking. And the first step is, of course, the legal structure and their income streams and the connection of income streams from where they are, kind of connected.
Okay, got it. Understood. So, we had a question here actually from one of the members, which said that, so what do free zone persons or entities need to do right now, right? And I think one of the answers to this, from at least, I'm not a tax expert, but you guys are, but I think what I'm understanding is three things, right? A, look at your legal corporate structure and really map it out, right, in one place, right? Two is look at where your customers are, right? And is it international? Is it local? Are you just dealing with other free zone entities or other mainland entities, right? Where is that coming from, right? And number three, do a tax health check, right? There are many people who are doing that, including your firm as well, right?
Absolutely.
Get an external consultant in, right? Do a health check, look at where your payables and your receivables are coming in, see the structure, right? So that you can prepare for that.
Absolutely.
So hopefully that answers that question.
You've already answered. So you're becoming a tax consultant now.
Yeah. Awesome. Okay. So the next question I have for you guys is that, today, how can free zone businesses leverage the 0% corporate tax rate on their income? I know you mentioned there's different kinds of exemptions, etc., right? So we'd love to just deep dive on that. If I do want to protect myself from those taxes, right? What are the criteria that need to be there for me to take the benefit of leveraging the 0% tax rate?
So the first thing, of course, they need to start understanding every single company being registered in UAE. The permanent establishment concept is really, really important. They need to understand this. If the company is permanently established here, whether it is a free zone, whether it is they are into mainland, but they need to, if they can identify themselves as a permanent establishment.
What does it mean to be permanent established?
So it's basically a criteria which is being set by the internationally. We use this kind of criteria to see that if this particular company or national person is permanently established in a particular country, right? And that is going to be covered in a particular jurisdiction in terms of calculating the taxes and paying the taxes. Now, the thing is, if you have maybe office, if you have a place where you do a lot of, you do your maximum kind of work, you have your management is maybe residing in UAE, they are doing a lot of activity here. So that means, and also you're controlling your business network while sitting in UAE. So that means you're permanently established here.
Got it.
But yes, there are exceptions in terms of permanent establishment. So for example, if you have opened some sort of a business where you are just displaying the products, you're not doing the commercial activity, maybe you're maybe just residing in this country in terms of storing the products, or you're just delivering the products to some other countries, maybe you're just transporting the products. So that means you're not doing the actual commercial activity here within the UAE. So that means you're not a permanent establishment.
Got it.
So yes, you need to start thinking that you are being working in UAE, being established in UAE, are you a permanent establishment in UAE or not? That is the first really important step to understand.
So
Then,
just to hold there a little bit. So this permanent establishment, right? Is that more subjective, or is there like objective checklists someone can take to be able to be like, okay, you know what, we are permanently established or not in this region?
so I think you've already, when you use the word subjective, so
Right.
it's already a subjective question, right?
Yeah.
So I think the most important part is to understand that uh, a company being established within the UAE, does they have any other concern or links to any other country?
Yeah.
Maybe they are just a branch being registered in UAE. Maybe they've been using this office or this particular country as just a front office
Right.
or for distributing. So that means they are consolidating their income back into some other country, right?
Right.
So that means they are permanently established somewhere else.
Right.
So they have to start calculating, they will be paying taxes somewhere else maybe,
Right.
right? So you need to start understanding, are you going to pay taxes here within the UAE for
Right.
corporate tax particularly
Right.
or not?
Right.
That is the first question. Then, yes, we need to start thinking, are you established in mainland or in free zone? You have to register. It's very simple.
Yeah.
People still
So
have some.
regardless, you have to register.
Yes, of
Yeah.
course, you
Yeah.
have to. Absolutely. You have to register. That is the first step, or going to be the first step,
Mhm.
of course. And we already know what are going to be the deadlines, of course, starting from 1st June 2023, right?
Mhm.
Yeah.
So, for
exactly.
example, what are the
The
table
reporting
periods, of course,
yes. For
which
the,
people need to focus, right?
yes, the people need to focus on that one. Let's say if someone have their year starting from 1st of July and ending on 30th June 2024. So starting from 1st of July, so their tax period will be like that.
Yeah.
And within the next 9 months, you are
Following 9 months of
following
the
9
ending of
months
the, of
and
course,
ending of that period.
Mm.
That's mandatory. You have to file the tax return.
Correct. So then you have like different tax
Different
periods
tax period for different companies.
depending upon the overall financial periods of every company.
So I guess an example would be that, let's say my tax period is from June 1st, 2023
Correct.
to May 31st, 2024.
Correct.
Then my registration would be from June 1st, 2023.
Correct.
Right.
But that will be
And-
your open period to register, of
Right.
course.
And the first tax period would be from the middle of that year.
Correct. So next year, that
Next
means
year.
like following year,
Yes.
where your financial period is ending, maybe like
Like
30th
around-
of May,
Right. Yeah.
31st May, right?
Exactly. Yeah.
So ending 31st May, then you'll still have like 9 months after that ending of that period. And in those 9 months, you can file the return.
Yep. Okay. Makes
Yeah,
sense.
yeah.
So that is the first step. So everybody needs to register. So they need to start thinking, of course, it is going to be impacting them in terms of filing the return,
Right. Right.
whether they are paying 0% or not.
Exactly. But
Right.
that the one thing is very important. The financial period, mostly companies, the financial periods are writing on their MOAs.
Correct.
So while they're having their legal document at the time of inception of the company, they already decided through some resolution or through MOA or any legal document, they already decided their financial years. So
Correct.
they have to follow the same financial year for their company.
And if they are not following, so they need to make some correction, right?
Yes,
It's
if
really
they're-
important.
exactly.
Because legal documents is one part,
Hmm.
and people do not understand that they have to, like align
Right,
themselves with
right.
their actual legal documents, which is in terms of
Right, right.
company formation, that is the memorandum
Right.
of articles.
So to go back to the 0% corporate tax rate on their income, right?
Correct.
What are the criteria that need to be there,
Mhm.
right, for them to consider being, possible?
Possibly to
to
have
have
that, to
0%,
enjoy
yeah.
the 0%. Okay. Now, it's very subjective, but there are certain things which have been written already in the decree law. And the first step is, of course, they need to have a kind of a substance
Mhm.
adequate. They need to maintain adequate substance here within the UAE. So
Okay.
that means they have some economic substance here. That is
Okay.
number one thing. Then, of course, they need to be earning the qualified income streams.
Okay,
If they are not, so that means they are going to be taxable.
I see.
It's very simple.
And what are some of these examples of qualified?
We
income
don't
streams?
know because it's still to be announced.
Okay,
to be
so
announced.
it's still to be released.
Yeah.
We can say that maybe a company being registered like Pluto, for example, within the free zone, if you have all of your customers maybe outside and you're exporting services, or maybe you're sitting somewhere else and
Right.
giving services
Right.
or rendering services, so maybe that can become a qualifying income.
I see. So let's take an example, right? So let's say that, we have, I can see that we have about 80 people, 70 people that are joining right now who are, and many of them I can see actually may have things in the free zone entities. So let's call Acme Corp, which
Hmm.
is in a free zone entity,
Hmm.
right?
Hmm.
Acme Corp not sells a software product or
Mhm.
sells some sort of product,
Mhm.
right?
Mhm.
But their customers can be other free zone businesses, and it can also be mainland businesses. In
Right.
that case,
Mm.
they wouldn't be qualified for a 0% tax rate.
It depends, actually.
Most probably.
It depends,
Most probably, I
right?
see.
Most probably.
It
It
depends,
depends,
it depends.
but there are prominent chances that they will get charged with the 9%.
I see.
Yeah, but let's just say if they are earning they have their income streams within the free zone and outside the free zone, for example.
Yeah.
And within the free zone, because free zone existence had specifically by law or maybe like by rules or regulations,
Right.
we can say there is some immunity available, right, to
Yeah.
the companies being
Right.
registered in free zone,
Right.
that for a certain period of time they're not going to be taxed, for example.
Yeah.
Right.
So it depends that if they allow and they say that you can segregate your income within the free zone and income being generated outside the free
Right,
zone, maybe
right.
from mainland, from the mainland companies, for example, then that means they can segregate and they can calculate their corporate tax,
Absolutely.
liability according to the their income streams.
Yeah,
Got it.
this is very important point. Mr. Saqib actually highlighted that couple of free zones they have given even the documents for the exemption from the taxation for next 15 years, 10 years, or 5 years to the particular companies according to that. So we have to look into that. What actually FTA provide us on those against those particular documents, whether they are still like practicable or there is some other clarification on that. So we are also looking for that one. On a lighter note, if you don't have 375,000 profit in net profit, you have to pay 0%.
I see.
This is one of the
of course,
criteria.
So I think that
that's the first
actually
criteria.
answers one of the questions here, right?
Mm.
So basically, if you have, but you said 375,000 dirhams,
Correct.
right? 375,000 dirhams lesser in profit, but
Yeah.
not revenue, right?
Correct.
Profit,
Profit,
right?
profit,
Net profits.
Net profit.
Yeah.
Okay. Then you are most likely
Of course.
exempt from 0%.
Exactly.
You'll be paying 0%.
0%.
So
Then
you
there
are
are
paying
like
0%.
technically there are three slabs.
Got it.
So the first one is 0%. The
Yeah.
second one is 9%. The third one, of course, is specifically being mentioned about the multinational companies.
Got it.
Now, going into that deeply, if we really need to jump into the multinational kind of stuff, we really don't want to focus, but that percentage is still yet to be, like announced.
Got it.
But by the time they announce it, till that time, they have to pay 9%. Of
Got
course,
it.
they have to apply that if that is applicable to them.
Yeah,
of course.
makes sense. Makes sense. So just to summarize, right, the 0% tax rate, who can levy that, right?
Mhm.
I think the short answer is that it depends, right?
Correct.
But right, if you are a free zone entity
Mhm.
that is only doing with other free zone entities
Mhm.
or only exporting to outside, right? Maybe,
Maybe.
right,
Maybe,
you would
maybe,
be
yeah.
exempt.
Maybe.
But
Exactly.
again, you can't say that definitely. You
Like,
will need to still do
still
your
wait.
due diligence
Exactly.
to be able to do that.
Due
right?
diligence, of course, and wait for the final
Final
regulation to be
that's right, yeah, because that
announced,
is
of
yet
course.
still to be revealed.
Absolutely.
And we will be doing as soon as that releases.
Yeah, of course,
Yeah,
absolutely.
We already have
absolutely.
that schedule to be
Yes.
able to get that going another way as
Absolutely.
well.
Absolutely.
Okay, great. So one of the questions, and this is a really interesting one, which is that can a free zone person elect to be subject to corporate
Yeah,
tax?
definitely.
And why would someone do that?
Well, it depends. Maybe
Yeah.
they elect to be subject to corporate tax within the UAE just to avoid something else.
Got
Maybe
it. Yeah.
if they have something to do
In
with
other
international
entities.
taxation
Right,
and all
right,
that.
right.
So it's all about preparing yourself or your group structure according to their own requirements.
Right.
So yes, there is a possibility that if you're not subject to corporate tax or at all completely,
Mhm.
and you can still be considered as a free zone entity, but the thing is that
That the after you elect yourself for corporate tax, it's an irrevocable decision.
Oh, I see. Okay.
You
okay.
cannot reverse
yeah,
it
that
back.
that's another
till now, it is the explanation.
Got
Yeah.
it. Got
Maybe
it. So
they-
once you actually elect yourself to be subject to corporate tax,
Yeah.
there's no going back.
There's no
essentially.
going back. Right
So
now,
far?
so
No.
far it's like that.
So far it's
Maybe some circular came maybe tomorrow, but till now this is
That's
the
the law.
explanation.
Correct.
Yeah.
Got it. Got it. I understand. Okay. And and this is more of a financial outlook and this economic outlook that I wanted to ask you about, which is historically free zones like Jafza, right, have been doing very well and very attractive, right, because of so many reasons. But do you see any impact on free zones like this when corporate tax gets implemented?
No, absolutely. It's going to be same. Considering the qualifying income streams or the specific kind of definitions to be available or to be revealed, of course, in future, the designated zones are already being designed in a way that they are going to have some sort of exceptions.
Right.
And they have been enjoying that because
Yeah.
even in the VAT
Exactly.
circumstances, of
Yes.
course.
Yes.
So designated zone is considered to be like 0% if you are dealing within that zone already. So that means those companies who are registered already there, so they might be getting some exception on that part. But again, in my point of view, in my humble opinion, the only thing is, or the concept of corporate tax is that you have to make the corporate tax payments, of course,
Mhm.
in any case somewhere, maybe in UAE or
Right.
maybe outside the
Maybe
UAE, of course,
outside.
right?
Yeah.
Right.
Yeah.
And that has to be like that. Otherwise, you can't just avoid it.
Right.
So again, that leads to the permanent establishment rule.
Exactly.
Whether you show yourself as a permanent establishment over here,
You consider yourself
yeah,
as
or
exactly.
somewhere else,
Or
in the
somewhere
world.
else, maybe.
In
If
the
you're not
world.
here
So,
permanently
Right.
established, that means you're
Exactly.
somewhere else
Right.
permanently established, right?
Right.
So the concept is that now that this country is going to be, kind of started to align themselves
Yeah.
against the international taxation rules
Got it.
Yeah.
with
Exactly.
those rules, of course.
Got it. That makes sense. Looks like we have one question here that I thought it would be interesting to answer right now. Um, let's see. This is coming from the regarding ESR reports, right? So it says that the question here is that is the ESR report enough to fulfill the criteria of maintaining substance in UAE to be a qualifying free zone person, right?
Hmm.
Is that something that we have answers for right
Expert.
now?
Expert
No,
is
I'm
here.
not. Honestly, like when it comes to economic substance reporting, of course, that means if you have any sort of economic substance that you have to report, right?
Mhm.
But there are already like 6, 7, 8 different criterias there. For example, if you are a distribution of services, a
Yeah.
service center, distribution
Exactly.
center, being
Holding
into
company, yeah.
involved into the leasing part and all that kind of stuff. So those are certain
Banking sector,
categories.
all those things.
So that does not mean that if you are filing your kind of ESR return, or if you're reporting ESR
Right.
substance reporting there, and that will kind of allow you to avoid corporate tax return.
Right.
That's not going to be the case, of course.
Okay, I
Because
understand.
these are two different regulations.
These are two different things. Of
Different
course, we have to keep it separate.
entirely different
Entirely.
regulations.
Okay.
Yeah.
So that was a question asked by Amin from EPC Group. So Amin, hopefully we had answered that question of yours. And she had, I think they had a follow-up question, which was that when will the qualifying income be defined by the cabinet?
No, nobody knows.
Nobody
Nobody
knows.
knows.
Yeah.
Even I really, we can't comment anything on that because it's not there. So we still need to wait.
Okay.
Maybe
Yes.
like in few weeks time.
We are hoping it soon.
Very soon, of course, because
there's
it's
a
really
lot of questions.
a lot of queries
arising.
around,
Yeah.
like roaming around. And honestly, like 2 days before when we were having another session in house, so people assumed that being registered in free zone means that they don't even have to register and file the return.
Exactly.
Yeah.
So that is the problem.
Right. So, I mean, just to answer your question, which is that, that is unknown to us and everybody else.
Absolutely.
Right? And this is something that we're all looking forward to. And if you follow as a consultants and Pluto card, right, as soon as that comes out, right, we will be
Absolutely.
we will be making
Absolutely.
sure that
Absolutely.
you are aware of that, right? Okay, great. So now just let's dig into this a little bit deeper, right? But let's one of the questions here is that if a company is registered in a free zone but does a lot of businesses with the company in mainland, will they have to pay corporate tax on revenues generated from working with them? My answer, is that
Please.
yes, most likely they will need to be, right, unless they have some sort of exemptions that they may
You want to answer?
Look, we are not so much hopeful that in that case, while a company dealing inside the country, they will get an exception.
No, I think if we just refer back to the public consultation document, for example, just for a case, because there were few things being defined over there as a criteria, right? So if a company, because there are so many different kind of structures here in UAE, for example, a company having a branch office in mainland, a branch office in free zone, they have related party in free zone, they are supplying products to mainland, they are receiving products from mainland companies. So there are multiple types of course, scenarios are there. Now, given that, for example, if you have a passive income, this has been written over there. So if you have a passive income or passive income coming from the mainland, So that you can avoid, for example.
Yeah.
But how you're going to define passive, right?
Yeah.
In that case, it's very subjective.
Right.
So a company with 100 million, dirhams of revenue, maybe 100,000 dirhams worth of revenue might be passive, right?
Yeah.
But in someone else's case, it might be different.
Right.
So that is one thing. Now, of course, there is a probability that you might have to segregate that revenue coming from, of course, your mainland company,
Exactly.
and within the free zone, of course.
Exactly.
So you have to segregate those
Exactly.
incomes to calculate your corporate tax return. But
Yeah.
the most important part, if you are dealing within the group, for example, and you are a part of a bigger group structure where you have multiple companies, so the transfer pricing concept becomes really important.
Really important. Yeah.
So you can't just say that you've been shifting, kind of revenues,
From here and
profitability
there,
from here, one company to another, from A
there.
to B or B to A.
Right.
It's not the case. So
It's
transfer
not that much
pricing
easy, yeah.
concept has to be followed in the best possible way.
Yeah.
And that
Can
has
you
to be.
elaborate on that? Like, I think most people
there
here
are
are aware of transfer
yeah.
pricing, but if you could elaborate on that would be
There are
helpful.
4-5 methods of transfer pricing,
Okay.
which normally we follow for what you can say screening those things. But transfer pricing itself is a too broad concept and a too broad thing.
Okay.
So in a simple one question, we cannot cover that all.
Got it.
But the thing is this, the important thing which Mr. Saqib already mentioned, you guys, that when you have the transaction in between the related parties, in between the group, across the UAE or outside the country, there are prominent chances that you are under the rule of the transfer pricing.
Okay.
So then
No,
you have to follow that.
Let's just for the sake of explanation, hypothetically, if a group company, for example, transfers a product or sells the product to another group company, for example, and they actually charge them really high, for example,
Right.
compared to the market price.
Right.
So that means it is not arm's length transaction. It's not a fair transaction they are doing, right?
Exactly.
So that has to be the fair transaction. That is called the transfer pricing. So
Right.
it
Yeah.
has to be arm's length
Arm's
transaction
length transaction. Yeah,
That is the
that's
major
the rule.
concept.
That rule, yeah.
Got it.
within the group companies.
Okay. I see. Wow. Yeah. It's fairly
Again, the same thing. Going back to the first question, people should start looking into their revenue streams. They
Exactly.
need to start looking into their legal structure, their overall income streams, so that they can understand that what is happening over there
Yeah.
Right.
and how they can be kind
Right.
of result
Right.
into
Right.
So
maybe
how
paying
they-
9%
how-
or not. Maybe
how they are reaching their net profits.
correct.
So on that net profit, whether their 9% is applicable or
Right.
not. So each head of the account is very important right now
right.
throughout the financial statements.
Right.
Every company, all the accountants, all the relevant authorities, all the relevant person within the company, they are looking for that particular things. So the accounting perspective for all of the companies are very much important right now.
I see.
That is
So it's
one of
very
the key
important
things.
for you to have clean
Yeah,
books right now, right?
exactly.
And make
Absolutely.
especially for your account receivables.
They
you wanna-
have to start fixing it, for
Yeah.
example. And
Yeah.
we face this kind of challenge where
Exactly.
we have a lot of people actually coming to us asking, we have this challenge. We've been just carrying forward these amounts from the previous years, and there are provisions, there are accruals, there are things. They need to start thinking about it. They can't just pass the provisions. They can't just pass the accruals. It has
Yeah.
to be the proper accounting coming from
Yeah.
the proper accounting treatments.
Right.
So those need to be fixed if they are
Yeah.
not actually fixing it.
Right.
So that once they are fixed after the cutoff period, so they can kind of enjoy the clean balance sheet,
Right.
maybe.
Yeah.
And-
So when it comes to keeping track of your receivables and how you're getting that money into your revenue sources.
Now
what do you-
Pluto comes into the picture, of course. Absolutely,
Yeah,
the most
I-
important part.
I don't want to boast too much, but outside of a solution like Pluto, right? What have you seen how companies what do you think is the gold standard of maintaining these supporting documents and stuff so that people are able to do that? I know you have done several health checks with many companies in the past few weeks, right?
True.
Anything that stands out for you, because I know that we have a lot of free zone entities here, so it would be helpful for them to know okay, you know what, this is step number one, right, for me to take care. And just to just before you jump in, Saqib and Mohammed, I just wanted to let everyone on the live stream know that we will be taking questions right now, right? So if you have your questions, please put them in the chat, right, or in the comments, and we will be getting to it right after. Yeah.
Wonderful.
So one of the things which we are facing right now, which is actually positive, that a lot of companies, a lot of organizations now after their health checks after their detailed checking of their financial and their books of accounts, their chart of accounts, and all those things, now they are thinking toward the automation of couple of their specific modules, like where the company is having a lot of purchase officers, where the company having admin officers and purchase officers and procurement guys and all those things. So now they want to automate that one, because alongside with that one, we are also suggesting in our internal audit things. So we are suggesting them that, look, you guys are not following this one. There is no invoice for that one. You don't have the supporting document. Same thing happening in that one, health check assignments. So these things, it previously no one is asking you. It's your internal thing, but it is no more the internal thing. You
No,
have
I
to
think,
have keep 5 years records
exactly
with
minimum
you.
5 years. That's
Yeah.
really important part. And I think the software companies or ERPs, like for example Pluto,
Pluto, yeah.
Exhibit A, of course, we can say. So that becomes really important part of your life
Right.
when you have like so many multiple transactions on daily basis, and you can know that, okay, what is going on in your accounting record, of course.
Absolutely.
Now, what we have personally seen, people used to they used to take it very, as a anything else.
Right,
It,
yeah.
it,
To be
it was
granted.
to be
Very
granted,
lightly,
very
basically.
lightly.
Yeah,
Yes,
yeah.
exactly.
Yeah.
Now, when this new thing coming in, still people are started to at least they've started to
They
think
started
about
thinking,
it,
yeah,
right?
exactly,
That
exactly,
now
exactly.
that we need to do something from ERP's point of view, we have seen there are a lot of very important factors now. We have linked clients, of course, or direct clients of ours, where they are maintaining a lot of inventory,
Mm.
and on the year ends they are not doing their audits at
Mm.
all,
Oh wow. Okay.
and they are not doing their stock takes, and they've been
Exactly.
carrying forward all the
Yeah.
emissions, commissions, all the errors to one period to another period, right?
Mm.
Now the revenue losses, unrealized losses,
Mm.
that becomes a really important factor for them,
Exactly.
right?
Exactly.
Where they need to do it
Mm.
on the year end, at the year end, and
Right.
they need to adjust it if there is any loss.
Right.
Yeah.
Right.
So this is one factor, of course, and there could be like so many other factors like that.
Right. Wow.
Yeah.
Yeah. That's
And the
So-
small aspect of even the petty cash and all those things, now companies are looking toward to automate those things.
Exactly.
So you
and
can,
and literally, like we are now personally thinking to start using your platform.
Yeah.
Honestly,
Okay.
it's not that we've been doing this activity together.
yeah,
It literally like can really automate those things. So for
Yeah.
example, yesterday night I received one message from my of my credit card, which
Right.
was with my driver,
Right.
and it was like some smaller amount, and I was kind of like curious where they have spent it.
Right. 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 Yeah.
So
Yeah.
if we've been using this platform,
Yes.
so technically
So
it could help
technically-
us, of
Yeah.
course.
Absolutely.
it can help
absolutely.
us, yeah.
So I think what you're trying to say is that it is very important for accountants right now, especially in free zone entity, because mainland entities, it's mostly clear that you might most likely need to pay your
Yeah,
9%
exactly,
taxes,
exactly.
etc.
Or maybe not.
Or maybe,
Or
maybe
not,
not.
based
yeah.
on special
Based on the
circumstances,
exactly,
right?
yes.
But as a free zone entity, if you really want to protect yourself, really make sure that you are automating as much as possible. You're keeping
True.
track of your receivables, your payables, right? Your
Exactly.
invoices, your supporting documents, right? And again, not one person on your team can do that, right? So
Exactly.
make sure whether you're using QuickBooks, whether you're using
Any
NetSuite,
software.
whatever you're
Whatever
using,
you're using,
True.
just make sure that it is like set up appropriately so that
Correct.
this is automated moving forward. Because I feel like, bad accounting practices have been happening in the Middle East, not in UAE, because there
The people
hasn't.
used to take it very normal.
Yeah,
like
yeah.
It was nothing for them.
That's right. But now
That's the problem.
we actually have to report a lot of these
Absolutely.
things that are
Absolutely.
extremely important.
Absolutely.
Right?
Absolutely.
That makes a lot of sense.
Yeah.
So one of the questions I have is, this is coming from Connor Forbes, right? Thank you for joining us, Connor. So the question here is that, will free zone companies with foreign ownership avail the 0% rate? And then a follow-up question he asked is that, if the same company has UAE resident directors, will this be enough to satisfy PE requirements?
Okay, now
It's a very
we have
complex
like
question.
it's a very
Yeah,
complex.
yeah.
Honestly, like it has 2-3 parts
That's
in
right.
one single question.
Yeah.
Yeah.
So let's go with the first part.
I think,
again.
yeah.
I'll just repeat the
Yeah,
first
sure,
part,
sure,
which
sure.
is, will free zone companies with foreign ownership have the ability to avail the 0% rate?
Okay, I think going back to the same permanent establishment rule, that is the first
Right.
step to start to understand or to calculate that if that 0% applies to them directly or not.
Got it.
So if they are part of a foreign group or foreign companies, for example, if they are kind of consolidating all of their income
Mm.
there on that group level, so that means they might be paying nothing here, but still they need to file the return. That is
Got
number
it.
one.
Got it.
Now, the important factor what they need to apply or they need to start thinking about is, if this particular company, which is part of that foreign group maybe,
Mm.
that is the permanent establishment here or not.
Mhm.
So do they have a lot of commercial activity here
Mm.
locally? They've been doing a lot of commercial activity within this country or not?
Mhm.
They are selling product. They are serving their customers. They have a lot of client base here or not? And of course, that can be linked to their exactly.
Yeah.
The control is really important.
Mhm.
If they are controlling their complete group
Mhm.
while sitting in UAE,
Mhm.
so maybe they will just consider UAE as their permanent establishment.
Hmm.
The
Right. Yeah.
control on and the
Right,
management
right.
is one of the
So-
important factors, of
Yes.
course.
So essentially, the company needs to decide first, and based on like how they're already structured.
Absolutely, because
Are
nobody
they
else can come and,
Right.
of course,
Are they a permanently established business in UAE,
correct
or do they consider themselves to be a permanent establishment business outside
somewhere
of
else?
Somewhere else.
Exactly.
Okay.
So one thing now,
Yeah.
maybe their income streams might fall under that qualified income streams,
Mhm, mhm.
and their income streams, if qualify for those that list,
Right.
then yes, they might actually enjoy 0% straight
Got
away.
it. Got it.
But again, it's a very complex information. We can't actually answer based on just one question.
Right.
There are certain options, certain different types of
Right.
scenarios.
Criterias.
Exactly.
So-
But that is we still need to wait.
Right.
I believe
Yeah.
everyone needs to wait for now.
So Connor, I think I think there's one thing that we can be clear on is that you have to look at your legal structure right now and your accounting books to decide, and based on the rules and regulations that are there, is whether or not you consider yourself to be permanently established in UAE
Exactly.
versus many other companies.
So UAE resident directors can be staying outside the UAE for more than, let's say, 6 months.
Yeah.
And they have been dealing their business maybe in UK.
Right.
It
Right.
depends.
Yeah.
So there are different scenarios. So they have to start looking into their scenario. What
Right.
kind of situation is there?
Right,
That is
right.
one thing. Yeah.
Right. So and Connor's follow-up question was that if the same company the same company that has foreign ownership,
Correct.
right, has UAE resident directors, will this be enough to satisfy
No.
the PE requirements?
No, it's not the only thing. I think the permanent establishment criteria is very simple. You need to have a fixed place.
Mhm.
They need to have, for example, a commercial activity, your shops, your showrooms, you're selling, you're doing a lot of activity here. So that can be the permanent
Right,
establishment, part
right,
of the permanent
right.
establishment. But if you have, for example, branch companies around the world, and
Yeah.
those are under the UAE-based company, so it might become a permanent establishment, of course.
So again, Connor, I think what I want to really point out here is that just because they have UAE resident directors or not, those are not enough for you to figure out what is permanently established. There's just many other factors that happen there.
Absolutely.
Yeah. So there's essentially qualifying income
how
streams.
how their group structure is managed,
Yeah.
how their tax structure is there, for example, for other companies.
Right.
So actually, to answer this question, we need a lot of questions to ask from that concerned person.
Right. That's
Correct.
right.
Once they answer us that question, then
Yeah.
we can give them the exact thing. Okay,
Yeah. Yeah.
this is the exact.
No, that makes sense.
Yeah.
So I think essentially it's just that part of the UAE resident directors. That's just one of the criteria
Correct,
out
yeah.
of many
Many,
others,
exactly.
right?
It could be.
Yeah. So it's not clear cut that we can just say that just
Yeah,
because they
yeah.
have this, it is like that.
Correct.
So hopefully, Connor, I know many of these things are still up in the air, right? And there's still like rules and regulations to come out, but hopefully that answers or gives you a general perspective. We actually have a lot more questions that have
Wow.
come in right now. And this might be a much more simpler one, which is what are the minimum booking requirements from now?
Oh, what kind of booking requirements? Like accounting?
I think the person is asking about accounting requirements, but Marco, if you want to elaborate on your question a little bit, that would be helpful. And maybe we come back to this after Marco has elaborated on his question.
Oh, okay.
We have a follow up from Amin, right? So it says here that according to the MOFA website, the first tax period is from 1st of January 2024 to 31st December 2024.
Correct.
Okay.
If you have the financial year,
Yeah.
financial period of your company is starting from 1st January till 31st December,
Correct.
then
Okay.
yes.
So they say that first tax period is from that time. What about the 2023 second semester? Should we still return a filing for this period?
I think what I understood personally,
Yeah.
so it has to be 12 months period.
Right.
Very simple
The
criteria.
first tax period. Yeah.
And that'll be your first tax period. So, for example, if your tax period is starting from 1st January till 31st December, so that has to be complete 12 months,
Right.
consecutive 12 months.
Right.
But if you just start filing for like 6 months or partial period, that will not work.
Got
It has to be complete 12 months. That's it.
Got it. So it's like the trailing like 12
Yeah.
months.
12 months,
basically.
consecutive 12 months.
Following your financial year.
Got it.
Correct.
So Marco's question, so Amin, hopefully that answered your question, right? So Marco's question was that what are the minimum booking requirements from now? And he followed up saying that for accounting. So what are the minimum accounting booking requirements?
I think there is no minimum or maximum. The actual minimum we can say is you need to start following the international accounting standards. So this is the minimum side. Now, if there is anything which actually, kind of not according to the local law. So, for example, and if there is any specific requirement from the corporate tax side, I can give you an example. Maybe like entertainment expenses. We've been discussing this thing.
Exactly.
So if you can only kind of adjust up to 50% of your entertainment expenses. This is the deductible side of the expenses, for example, or adjustable expenses. Now, if you do that, for example, that means internally you've been adjusting those expenses entirely within your internal accounting records. And based on the international accounting standard, if that expense is particularly for the business, so of course you can adjust it. But to calculate the corporate tax, you can only adjust it up to 50%.
Got it.
So the first criteria, start following the international accounting standards. If there is anything specific written in the law, or you get anything specific from the law, so that you need to just follow the law, the local law. Simple.
So actually, you have to look into the three things. The first is the company's law.
Correct.
The second thing is the international financial reporting standards. And the third is your taxation laws. If we go in one example, like under the company's law, if you are having an LLC, so you have to have maintained your statutory reserves. So this is the law. So you have to look. Maybe this is not definitely not in the international financial reporting standard, but the local laws always prevail. So that's why we have to follow that one. So the local practices, local laws, taxation laws, international financial reporting standard, it's a mix up with all of the things, and we have
so many different things, of course.
Keenly, like observe and go through all those things.
Got it. Yeah, fairly complex, but Marco, I hope that answered some of your questions there, right? Okay, so let's see what else we have here. Terry was asking, and I think I have the answer to this, which is that, as I am understanding it, the 9% will be applicable on net profit as opposed to the overall revenue. And the answer is, at least from me, that is correct, right?
No, not overall. No,
it is on net profit.
It's going to be net profit, of course. But anything over and above 375,000 dirhams. So, for example, if you report 500,000 dirhams worth of net profits, so the up to 375,000, it is going to be taxed at 0%, and the remaining portion, which is going to be 125,000 dirhams, that will be taxed at 9%.
Got it. Okay, brilliant. Sounds good. I think those are some of the questions we had. We still have about 55 to 60 attendees right now. Folks, if you have questions that needs to be answered, right now is the time to get expert opinion, right?
Please.
But in the meanwhile, Saqib Mohammed, like anything else do you think that you feel is very important for folks to be able to consider right now?
No, I think people coming from the accounting background, they are more curious about these things or learning about these things, especially the businessmen who doesn't have that kind of knowledge, or they don't actually, sometimes they don't even care that they have to step into these kind of new changes. They have to face it. So I think it's really important that everybody gets aware, and they need to know that what is happening outside in the market and what kind of laws or rules or regulations are going to be applied. You can't just assume that it is going to be like that. But of course, if you know someone who is the expert, he knows the law better than you, he's the expert to the subject, so please do ask him.
Absolutely.
Really, that is the first step. If you can't just read the law, so just ask.
On the note of asking experts, we just have another question that came in, which is, can you please explain on the tax implication for intercompany transactions. So this was a question that was asked by Divya, right? So Divya is a CA, right? And they're very curious about, essentially what are the tax implications for intercompany transactions? Because again, a lot of free zone companies and mainland companies as well, they have multiple entities.
Absolutely.
Right? They may, I know a lot of group holdings companies that are only in free zones, right? That have multiple entities, right? And they may share profits, revenues within each other for different kinds of reasons.
That's
right?
true. That's true.
So Divya's question is that what is the implication of intercompany transactions?
So first thing, of course, that is really important. Again, we already mentioned this, discussed about the transfer pricing rule. So this is most important. Because there could be so many different types of intercompany transactions.
Yeah.
So I'm assuming that you're just focusing on the revenue part, of course, because the income part is going to be the relevant transaction. But there could be so many other. For example, they're giving loans to each other. They're investing. They're withdrawing. They need cash. They just use that their resources sometimes. So I think the most important part is, if related to the revenue, if one company is selling a product or service or rendering service to the other company, which is part of the same group, so they need to start following the transfer pricing rules.
Got it.
That is really important.
Got it.
It can't be just away from the market standards.
Right.
That is number one. But if they are still getting some income out of it, so for example, a free zone company have some transactions with their mainland company, so maybe they can differentiate and they can just avoid that, for example. But again, it needs to be answered that can become a qualified income or not.
Yes.
But they can't actually shift their profits from one part to another. Of course, they can't do that.
Right.
They need to understand this. If a product price is, let's say, a cost is 100 dirhams, they can't just sell that for 200 dirhams to other company, right?
Yeah.
Given
All
that
that-
the price of that product is 150 maybe.
Exactly.
Right.
So that they can't do that.
Right.
So this is they need to avoid
Right.
for doing these kind of
So
things.
again,
Of
the
course.
arm's length transaction.
Arm's length, of
Yeah.
course. That's the rule.
But if they're making transactions, say to make payroll, for example, right, for another entities, again, I think it's subjective. But because a lot of intercompany transactions happen because, for example, some employees may have their employment agreement for one entity versus the other, and the entity may need to transfer some funds to be able to make that payments, right?
Correct.
So those kind of intercompany transactions.
But that might not have any impact on the corporate tax calculation at all,
Exactly.
because that's not part of the P&L.
P&L.
Got it.
So
that's not gonna make
maybe
a
they are just taking some loan, maybe they are getting some investment, maybe they are just giving them or supporting them in terms of paying some expenses.
Yeah.
So we need to see that the payroll being entered, for example, in that company or being adjusted in that company is
Got it.
correctly being done or not.
Yeah, that makes
That,
sense.
that has to be fair,
That makes sense.
honestly.
Yeah.
So you can't just say that I'm a chairman of a company and I've been single owner. I can pay, let's say,
Yeah.
a wonderful package to my own self. It's not like that.
Right.
So it has to be, according to the market standards.
Yeah, exactly.
Yes, you can adjust because you are giving services, rendering services to your own company,
Yeah.
because company is considered a statutory body
Right.
or individual, of course,
Right.
a legal entity. So if you are giving services, you need to be getting returned out,
Right,
of
right,
course,
right.
against that.
Right.
But
like that
it has
you-
to be market with the market standards, right?
Right.
Not like that you are earning 2 million in the whole year and you have 1.8 million of your salary only.
Right. Makes sense.
Don't take wrong, advice from there.
Yeah. So
Don't do that.
Yeah. So Divya, I hope I was able to answer your questions to the best of our abilities. Of course, we need to understand your situation a little bit better, right? But hopefully that gives you a general idea.
Absolutely.
We actually have many other questions that came in and some very interesting ones right now. So this is a question from Abhijit, right? Abhijit works at the Himalaya Drug Company, right? So Abhijit's question is that, as per the public consultation document, if a free zone person has any mainland sourced income, then it will lose its free zone benefit.
Correct.
What about sales by a free zone company to a mainland subsidiary?
Okay, so I think when you say free zone person has any mainland sourced income, when you say that, means that becomes like selling to mainland, of course.
That's correct. Yes.
So it's the same thing. So the thing is, if you are having a free zone company for just entirely to get benefited of 0%,
right. That's no longer true.
true.
Yeah.
So it has to be properly structured and taxed.
Right.
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 And if you're just trying to avoid the tax, it is not going to be the case. So the thing is, you need to be able to explain the authority that the source of income, or the income being sourced from mainland,
Right.
from where it is coming from,
Right.
right? Number
Right.
one, and it is a qualified income stream. If it
Yeah.
is, then yes. If it
Yeah.
is, you have registered a company just for the sake of getting benefited out of it.
Yeah.
So it's not
That's
going
not
to be the
good.
case. Yeah.
So Abhijit, hopefully that answers your question. But if I could summarize the answer, which is that
But again, I'm sorry, because he's saying that mainland subsidiary, because that becomes a linked one, right?
I
So
see.
again, the same thing. I think
Oh, I see, I see.
it's almost the same thing.
Right. So it was very similar to Divya's question, which
Yeah.
is that because Abhijit, I think what you're asking is a free zone company is making transactions with another mainland subsidiary, so one of their own companies, right? And that is a little bit different, right?
Correct.
Because it depends upon
Maybe they will allow you to just segregate it.
right,
Yeah.
Maybe.
right,
But they might actually allow you to, if you're getting some income from mainland, so you have to tax that at 9% maybe, and the other part you just have to
Got it,
you
got it.
you can just
Got it.
enjoy 0%.
Yeah.
right,
So the thing is, there
Qualifying
are
income.
going to be, of course, two parts. Your qualifying income stream, that will be taxed at 0%
right,
if you just follow and fulfill the criteria.
right.
Yeah.
Sorry, I cut.
No, that's fine. That's fine. So I think it's essentially that the same kind of like things that you mentioned around intercompany transactions,
Mm.
same kind of things apply here.
Absolutely.
Which is that
Exactly.
it really depends upon the nature of the transaction,
Mm.
the profit that you're making there,
Mm.
right? The what that sales structure looks like, right?
Correct.
If you could summarize that in a few data points, like 2 points maybe, right? What would that be, Saqib? Like
So first thing, I think we should not go back and refer every time the public consultation document,
Yeah.
right? That was a consulting document.
Okay.
That was not the law.
Exactly.
Right.
Exactly.
So the law is in our hands, and that actually states really clearly only about the qualifying income streams
got it,
for the free zones.
got it,
And we're still waiting for that. I think there are two parts really important: income being generated from mainland and income being generated from outside the UAE. And the third part is income being generated within the free zone, or maybe from another or different free zone.
got it.
So these things will be defined properly by getting of course, the executive regulation, and maybe the upcoming regulation.
Regulations. Okay, excellent. Thank you very much for that answer. Okay, we have another question from Hadi, right? So Hadi Omer, so he's saying that let's say that somebody only wants to work in online business, right? So mostly an e-commerce business, right? Is it mandatory to register in UAE or not? I think the answer is
course.
if you're going to be doing business here, you have
Absolutely,
to, right?
absolutely.
If yes, then free zone registration fulfillment, is it required? Absolutely. Like you don't have to be a free zone company to do e-commerce transactions, but if you are, right, or if you're doing any business in UAE, you have to register for
Absolutely.
corporate tax.
Yeah.
Absolutely.
That's
That's entirely
the answer
that's
for
the
that.
answer.
Yeah.
Straightforward. Yeah.
Cool. Okay, so we have Rajendra, right? Rajendra is the CFO of Crayon Media, right, and Middle East, Crayon India and Middle East. So Rajendra's question is: will UAE companies be able to take credit of foreign withholding tax deducted?
Yes. Absolutely.
Brilliant.
Yes.
Okay.
They
It's
can.
very straightforward. They can, and I think it's really important to understand if there are like at source deductions against some incomes in different countries, so they can definitely they can gain advantage of that, getting the tax credit, of course,
Yeah.
Right.
because countries do not want you to pay double.
Right.
Yeah,
Right.
exactly.
Right.
It- If it is taxed once,
Yeah.
it should not be
You don't want
taxed
to be
again.
double taxed.
Exactly.
But the
Yeah.
double tax treaty document is important over here.
Yeah,
So
of
is the
course,
double
absolutely.
tax treaty with all countries, all
No, no.
countries,
It's
or is there a
with-
specific
it's-
list?
No,
of
no, this is
countries?
specific
It is
list.
specific with each country, but UAE almost having most of the European countries.
The
and
major
all.
countries,
So
yes, are
India
there.
would also apply there.
Yeah, India's
Yeah,
there.
yeah.
India's there on the
India's
list.
there.
Yeah.
They're on the
India's
list.
there.
Yeah,
then we
because
have
we're getting-
Cyprus is there. We have, for example,
So
how
for-
many? UK is there.
Yeah.
Oh, you
United Kingdom is there.
I see.
So for
Okay,
that
so-
particular thing, they have
And
to
there
have
there
a double
have been,
tax treaty document.
for example, there've been a lot of other treaties. They are kind of under the discussion,
Yeah.
under process. So of course they'll be signed. Maybe
Exactly.
it might take like 1 year or 2 years. Nobody knows.
Got it, got
But
it.
yes, withholding tax being deducted,
Yeah.
it's really simple. If that is being done, so you need to have a document of that transaction, and yes, you might be able to get the credit against that.
Got it. Yeah. So I think this question was actually pretty interesting because multiple folks have asked this, right? So Paulina and Rajendra, right? They've both asked the fact that whether this is possible or not. So I think the TLDR here is that yes, right? UAE doesn't want you to get double taxed. So if you have withholding taxes in other nations,
Yeah,
most likely you would be able to
Absolutely.
deduct them. but you need to consult that document to make sure that
Absolutely.
the business that you're doing with
if-
that country
exactly.
is applicable,
Yes,
right?
that's
As well
correct.
as you have the tax residency document
Tax
of the
residency
UAE.
documents.
That's
Okay.
one
Yeah.
thing, of course. Yeah.
Absolutely.
That is mandatory.
Okay, great. So Mitesh is joining us as well. So Mitesh, he is the CFO, right, of Spire Solutions, right? So Mitesh had a question, which is
Specific
that, and first of all, Mitesh, thank you very much, right, and glad that you're enjoying the webinar so far. But Mitesh's question is that, are there any non-deductible or non-allowable expenses for tax purposes? So I think you mentioned something about entertainment,
yeah,
right?
exactly. So entertainment is one of
Yeah.
them, of course. There could be some others,
Mhm.
but we really don't know still.
Okay.
But there have been a few of them being mentioned, particularly in the law, of course. Yes, a company can carry forward the losses, of course. That is adjustable for the
Okay.
upcoming periods, of course. That is one thing.
Mm.
But up to a certain kind of percentage, it's
Yeah.
not that the entirely you can shift your loss from one period to another. It's not the case.
Okay.
For the entertainment expenses, yes, there is a limitation of 50%, of course. For example, like in terms of
So entertainment could be, for example, travel and entertainment, like T&E expenses, right? Like
correct, yeah. If it is
employee
no,
reimbursements, travel expense, is that?
I think when we say entertainment expense, it could be related to your clients and customers or business customers,
Exactly,
right?
exactly.
So
That's particularly related to
particularly
that.
for your clients and customers, of course, it has
Yeah.
to be related to that. If
Okay.
you're doing any in-house dinner or something, maybe for your employees,
Okay.
that might not be part of that.
Yeah.
But again, the same thing. If you've been paying a lot of money, you can't just say that I'm taking my client on a day trip to a desert
Hawaii, right?
exactly,
Yeah.
Hawaii, of course. I was, by the way, taking you to the safari, but anyways.
I'm still interested in
You're
that.
still interested. Okay. Maybe next time.
Yeah.
Okay. So the thing is that the first basic criteria, the expense has to be legitimate. That is number one. Of course, it has to be the business expense. That is number two. It has to be recorded as per the international accounting standards. That is
Right.
number three.
Right.
Then yes, there are criteria which you have to maintain and meet according to the corporate tax requirements, of course.
Yeah.
And that is why we've been kind of stressing a lot to our clients or the connected people or within the network that everyone needs to start focusing on building up their financials.
The automation.
And the automation, of course, part of them, they might have to start thinking they might have to create another book
Mm.
just for the sake
Yeah.
of corporate tax reporting.
Exactly.
They might have to keep it outside their system. They might have to, because ultimately the reconciliation items will become really important in future. That
Yes.
you've been maintaining one list of chart of accounts and you've been maintaining another chart of accounts, then
One-
had to be bridged, right?
One
So
for
next
the
time, if
management, one for the
exactly,
taxation.
so the internal management and reporting will be slightly different than the actual corporate tax reporting. So you need to start maintaining that.
Yeah. Exactly.
So there has to be really good switches. You might have to consider that, okay, you need to switch from one part to another part, from internal reporting to the corporate tax reporting. So it'll be definitely there.
So one thing that we have been doing internally for our own books, right? Because we are a free zone entity, so we have configured Pluto for ourselves to be able to have different categories called deductible or non-deductible expenses.
Correct. Yeah.
Right?
Yeah. Definitely. Exactly.
Yeah.
Yes.
So what we do now is that every time we make a transaction on one of our Pluto corporate cards, right, or we pay our invoices within Pluto itself, we've set up our system to be able to auto categorize
Exactly.
based on the receipt
Correct.
that we get
Correct.
to be able
Correct.
to do that.
Yes, that's correct.
This is one of the particular of the tax health check,
I see.
like where we check what exactly is gonna be.
No, exactly.
deductible or
We've been
not.
dealing a lot of clients recently. Some of them are from media, some of them are advertisement,
Right.
restaurants, major restaurant chains,
Holding
healthcare,
companies.
holding companies. So the first step, what we are doing is to take out the trial balance of that company
Right.
to start looking into
Exactly.
the actual chart of accounts, what
Right.
they've been doing,
Yeah.
and what is the problem. So we need to see the gap between the actual. They have to be aligned,
Right.
and they have to start aligning themselves, of course, with the corporate tax law.
Right.
Simple. Yeah.
So just to reiterate Mitesh's question, which was that, are there any non-deductible or non-allowable expenses
Yes.
for tax purposes?
Yes.
If you could summarize the answer to that in maybe
Yes,
one or two
there
points.
are, of course, but very particularly entertainment expenses, some of the interest being paid within the group, maybe,
Yeah.
and those kind of things are already there. But generally, the actual business expenses will be allowed to be adjusted, of course.
Exactly.
And some of them will be restricted.
Yeah.
But you
Some-
can't just say that you can, again, the same thing. You can't have unrealistic salaries of your directors, maybe.
Yeah.
Okay.
Or you can't have the unrealistic
depreciation.
exactly the unrealistic depreciation, maybe.
You cannot
You can't
have.
just change the depreciation method. You can't just change the you can't have the different depreciation methods
exactly,
for different
exactly.
classes of assets, right?
Exactly.
So those kind of things you can't
You
just
have to.
do it like that.
Right. Right.
Of course, you need to follow the international accounting
Absolutely.
standards. That's first thing.
So looks like we are over time, right? But today we talked a lot about creating various kinds of like accounting and automation policies, right, within your company. So we talked about the health check as
Absolutely.
well, right? We also talked about the fact that maybe there's a world where you need to create two books now, right?
Yeah.
One that is strictly for your corporate tax,
Absolutely.
subsidiary taxes, and the other as
It
you are
happens
going,
in
right?
any other like tax-ridden
Right,
countries.
right,
Of course, it's
yeah.
really a normal basic practice. Of course.
We also talked about maintaining strict audit logs, maintaining
True.
strict supporting documents for at
True.
least 5 years,
True.
right?
True.
You also gave some tips around categorization based
Absolutely.
on deductible, non-deductible
Absolutely.
expenses.
Absolutely.
So all of these really sounds like a modern accountant.
Exactly.
They
Absolutely.
sound like the modern accountant's toolkit. So the good news is that we are actually doing another webinar, right,
Yeah.
on the 25th, is it? I think
It's
so.
on 25th.
Yes,
Yes,
it's on the
that's correct.
25th.
Yeah, you
And-
have rightly linked it. Of course.
Yeah,
Wonderful.
so we're doing this on the 25th, and this is going to be a very, very interesting one because we are actually going to be hosting the IFA, right, to be able to join this event with us.
Correct.
And the IFA, for folks who don't know, right, is the institution of like financial accountants, right?
British
And
accounting
British
body.
accounting,
Of course,
right?
yeah.
With over like 50,000 members, like
Yeah.
all over the world,
Correct.
right? And we will be talking about the modern accountant, right?
Correct.
What is it
Absolutely.
like to be a modern accountant in this day and age,
Absolutely.
right? What are the tools they use? What are the new practices that you use? And as you guys have worked with many clients and companies, you probably have a very strong idea, including the IFA, on what that means. So we'll be hosting Jonathan and Saqib, Jonathan who's from IFA and Saqib from SA, right, to be able to really talk about what does the modern accountant's approach and toolkit look like.
Yeah.
So my colleague here is going to be sharing the link to sign up for the event in the comments section. So take a look at the event. If you enjoyed today's event, you'll be able to join that one as well, right? So make sure you RSVP so you don't forget, right? But other than that, I think this was fantastic.
It was really good.
Yeah.
Honestly, it was really exciting.
Yeah, hopefully everybody got their answers, right?
Yeah.
I think one final question, and then we will call it a day, which is from Abhijit, right? Abhijit just followed up. He asked, what about dividends from a mainland subsidiary to free zone company?
So if again there has been some you can say some of the information is not revealed yet, or maybe like coming into the picture. If the dividend is a qualified dividend, so yes, that you can take it like as a non-taxable income,
Got it.
maybe.
Yeah.
But generally it can be other way around. But we
Till
need to
now,
stay
we considering the profit before dividends.
exactly. Yeah.
Till now,
Got it.
Till now.
the
Yeah.
profit before
But again,
dividends.
being paid by the mainland company, mainland
To-
subsidiary to
then
free zone, it's a specific
it's a
actually
specific-
structure
yeah,
where
it's
he's
a
been asking actually
specific
the same thing.
activity.
Correct.
Yeah.
But again, a dividend being paid, that means dividend is kind of the part of income being shared to the
other
to the
company.
owner of that company,
Mm.
right? Which is going to be like parent company in
Exactly,
free zone, right?
Right.
So when the parent company is receiving that income, the question is that income is going to be taxed or not,
Yeah.
right?
Right.
So if that becomes a qualified income stream, again the same thing. So
Yeah.
it will not be taxed. If that is the qualified, then it's not taxed. Otherwise, of course, it has
Yeah.
to be. So again, we might have to do a follow-up webinar very soon
Yeah.
once we receive the
Yeah,
regulations on this thing.
Yeah, the qualifying income and all
Yeah,
those
it's,
things.
it's really
Once
important,
we
of course.
received, we will jump into that one and we will try to give you
Correct,
as much
correct.
information
So-
as we have.
Cool. Okay.
Yeah.
So again, guys, reminder that you can join the Accountants in the Modern World webinar in the link in the comments, right?
Yeah.
Correct.
We'll call it a day today. I think we are, enough tax for a Friday evening.
Absolutely, yeah.
Hopefully, you guys have a lovely evening ahead, and thank you so much.
Thank you so much.
guys, for
Thank you.
attending, and
Thank you,
we're
everyone.
looking forward to chatting again in
Absolutely.
a few weeks.
Absolutely.
Right?
Thank you so much, everyone.
Thank you, everyone.
Thank you
Thank
very much. Okay. So I think we're going to be switching off the live stream right now.